Thanks everyone for attending. We've got looks like 41 people listening, 42 and growing, which is great. Yeah, very excited to have Badger DAO and particularly the DIGG folk here to teach us more about how they're using the KPI options with the DIGG product. I'm also just keen to understand DIGG better and expose, maybe the UMA community who may not have used the products directly to understanding more how they work. So this event was put together kind of with that intention. Also, I think with the general intention of connecting our communities more. We have very good relationship with Badger DAO, and I know that plenty of super humans kind of came from the Badger DAO community. And so I think any opportunity we have to kind of solidify that relationship is a good one. And so yeah, just connected to these guys and really excited to kind of learn more about them. So do you guys want to maybe introduce yourselves and maybe just kick off kind of the first thing we want to cover?
Yeah, cool. Thanks for the intro. I can start for sure. And hey, everybody, and thanks to the UMA team for welcoming us to their Discord. For those that know Badger, we're very much a partner first organization. So excited to collaborate, mix our community members together, and hopefully educate people on the stuff that we're doing together and how it works, and generate some interest, some conversation, some feedback, all that sort of stuff. But for those sort of new to Badger, sort of the Cole's notes or the main mission here is, we're focused on building the products and infrastructure to bring Bitcoin to DeFi. A lot of that is anchored on sort of our main product, which is our set vaults, which provide opportunity for users to put their assets to work and earn yield on their investments. Today we're going to focus a little bit on DIGG as it pertains to our collaboration with UMA. I'll let Weezik and Wasabi sort of dig into that, pun intended. But to give everybody a brief overview, the DIGG Dojo is something that sort of came about organically and really, shows the power of community and support through that. We decided to introduce this as an event series kind of run by community members and what we call ambassadors to really continue the discussion around DIGG specifically, its performance, and provide sort of an open feedback loop for improvements over time, and really allow community members to engage in the conversation and shape the future of DIGG. So with that, we developed the DIGG Dojo event series that happens weekly, where we've sort of generated, I see a lot of those faces here, sort of what's the word, fan club of really sort of bullish DIGG supporters, which has been great. A lot of smart individuals providing really great insight, feedback, and joining the conversation on DIGG. And all of that, and I'll give all the credit to Weezik and Wasabi for sort of being the leads there. I'd say everybody needs someone in their life who looks at them the way that Weezik looks at DIGG. So with that, I'll hand it over to those guys, and they can kind of take you through DIGG, and then we'll kind of lead into how the KPI options play a big role.
Yeah, I'll go ahead and kick it off, I guess. Hey everyone, my name's Weezik. So I've been working with Badger for, I guess, going back to February or so, on or off. My background's in finance, so I initially came on to help with just a lot of kind of cash flow modeling and do a lot of work with Mason and some others on financial summaries and just kind of treasury management. But really kind of one of the things that really brought me to Badger, and what has brought me even to the UMA community as well, is the use of options and how to better use options in the whole DeFi community to help drive incentives and raise capital and just use things a lot more strategically, similar to traditional finance. And so with DIGG, I think I'll pause there in an attempt to give Wasabi an intro, and then we can talk about DIGG a little bit. I'm passionate, so I wanted to jump right in, but don't want to jump over just yet. So yes, that's me. So basically, been part of this with Wasabi and another individual who, I don't know if he's on the call, but Omnifarious. We've kind of been a trifecta of support. Our backgrounds, I think, are all very complementary too. So finance, marketing, and kind of business applications and development have been a very unique combination that allows us to kind of move stuff quickly with the community as well. So I'll pause on that for a minute and hand it over to Wasabi and anyone else who may want to talk on this.
Hey, what's going on? This is Wasabi. Thanks, Weezik, for the introduction. Yeah, I mean, I'm just a member of the Badger community who is interested in DIGG, got involved. My professional background is in marketing and specifically copywriting for financial products. So, I think a lot about how to explain DeFi concepts to people in a way that's instantly graspable. And DIGG is one of the more complex products out there in DeFi. And then with the UMA, there's another layer. With options, there's another layer of complexity or system on top of that. So it's great to be able to work and through these calls and articles and stuff that we're putting out to try to broaden the audience to people, make these things accessible for kind of more casual people, go from someone browsing on Twitter or listening to a podcast to someone that's understands these products on a deep enough level to ape in. So that's what I love to do, and happy to be here. I'm really excited to hear more about this design space that UMA opens up with the options, and I'm particularly looking forward to seeing if we can get some options rolled out for people getting DIGG tattoos, exploring what the Oracle would look like for that. So with that, I would I guess turn it over to Uma or back to Weezik. I don't know. Should we do like a deep dive into what is DIGG and how does it work? I think that's one of the main things that we're trying to do today.
Yeah, let's do like a 5-minute what is DIGG kind of explanation. As William said, I'm a big DIGG supporter, so I'll go through and we've got looks like 50, 60 people on this call, 70 people. So definitely want to take a moment to pitch why I think DIGG is awesome, right? So basically, I think William mentioned it a little bit. DIGG is, I don't think it's the first. It's one of the first like major products though for Badger that I think after they launched their vaults back in February. It's an elastic supply token pegged to the price of Bitcoin and governed by Badger DAO. It's not first to this place. This world of elastic rebasing tokens obviously was Ampleforth was the first non-custodial stablecoin in the space, and DIGG was built off of the Ample code base. The only major difference between Ample and DIGG is that DIGG is pegged to Bitcoin, whereas Ample is pegged to USD. So an initial supply of 4,000 tokens were airdropped earlier this year, and that's when DIGG basically kicked off its life, right? One of the big differentiators too is the idea of BDIGG. So it's the interest-bearing form of DIGG. When you stake your DIGG on Badger Finance, you'll receive BDIGG back in your wallet. And it just basically is a representation of your share in the vault. And BDIGG does not rebase. And so that's an important piece of this when considering just kind of strategies in terms of buying and holding DIGG and such. I'll avoid going down that too much, but again, the main idea is that when you buy DIGG, you're basically buying a fixed percentage of the overall market cap. So, it's not a traditional coin that, go out there and kind of look for it, buy it, and see if the price goes up or down. It's a much more complicated asset, and it also takes time, right? There's an element as a non-custodial coin that has to kind of get out into the world and find its baseline and figure out where that is, and then go from there. And the long-term utility and strategy is really as a hedge, right, to Bitcoin. And as it finds its steady state, there's also a short-term speculative view that I will say is my own, but I think others would probably agree in terms of a short-term, just like one-time revenue generating event. There's also very volatile swings at the beginning that Ample kind of followed if you were to look back at the history of it. So for me personally, when I'm looking at the asset of DIGG and why I'm a big believer and supporter of it and have been for some time, is really the short-term and long-term utility. Short-term opportunity or asymmetrical opportunity, and then the long-term utility of creating a non-custodial Bitcoin representation in DeFi has a lot of advantages that can create, more complex financial assets. You can create balancer pools. You can create, index synthetic indexes or partially collateralized indexes. And so I think creating the synthetic rebasing asset is a really cool thing. And then just lastly, we'll say the kind of geek side of me who grew up in econ and math classes loves the idea of being able to actually create something that really is only possible up until this point, like in books or in kind of like theoretical explanations, going back to my econ courses of like what elastic rebasing mechanics and how they work. But very rarely do you get to actually build something in real life. And so that is a quick, I don't know if I kept it to 5 minutes or not, but that's DIGG. And so quickly, I guess I'll just cover KPI options, since this is an UMA community, and we obviously love UMA at Badger as well. So it's a very mutually beneficial relationship. I kind of see Badger as a bringing DeFi or BTC to DeFi, but also as a pretty strong synthetics play. I mean, if you think about DIGG and other products, there's really a lot of similarities and a lot of synergy tied to UMA. So, KPI options, no need to explain what these are to this group, but the main probably point of discussion is just how we iterated on it over the last couple of months. And so KPI options were launched. I don't have the dates in front of me, so don't hold me to it, but I think it was like 3 months ago with about 82 DIGG in the rewards pool that rose roughly 4 million in value. At the time, it was at the same time that the market just decided to, turn upside down. And so the one we looked at it, and so it ended after the 30 rebase, the 30 days ended, and it ended with no rewards unlocked. And we kind of looked at it and we said, look, this idea was great, but we tweak it a little bit and learn from this past rebasing event. I think we can create something that will run in perpetuity and can actually drive incentives that align, like use out of protocol and behaviors to help align incentives and drive behaviors. And so we looked at it and we said, okay, what if the rebasing event went every 30 days, options expire, and then we roll over the rewards and then kickstart it again. And you mitigate this one-time failure event where like something could happen. And we also said, okay, well, if you're pushing for people to come in and buy, we need to incentivize people to hold, but we also need to incentivize people to buy. So we said, let's split the options into 2 categories. And essentially the way it works is each rebasing event comes and goes. And so we're currently in day 20 of this current rebasing event. And at the end of it, whether we unlock anything or nothing, we're going to look at the past 30 days. And for anybody that held their position or sold less than 25% of their position, they will carry over 100% of their options, plus a multiplier. And what that basically does is it continues to reallocate options from sellers to holders. So event to event to event, you're essentially slowly distilling options to people that are actually holding DIGG. So 60% of the options are given out to people that are holding DIGG and or selling less than 25% of their position. Now, holding DIGG is not the only thing that matters here. And so we also allocated another 35% to people that are buying DIGG. So essentially every 30 days, you have 2 ways to increase your options and thus increase your ability to unlock rewards. And our thesis, if you will, I mean, the whole like underlying belief in this is that by creating a KPI options program that runs in perpetuity, you're essentially allowing the slow like reallocation of options from sellers to holders, which helps move the price above peg. And you're also bringing in new buyers by incentivizing them through options each 30-day period. And so you've got something that can help move in the direction you want to move. And so it's not, there's probably other things, and there's probably people on this call that would say, well, what about above peg? How do you continue to increase positive expansion? And by no means will I argue that there's a perfect strategy out there in every way, but I do strongly believe that the KPI options program as designed uniquely helps drive DIGG towards peg in a way that doesn't adjust the mechanics and stays true to the mission of DIGG, which is creating a synthetic rebasing token on DeFi. So there's so much more I think we could talk about here. I know Wasabi will get into probably Oracle discussions and even some future roadmap stuff here that we're excited to share. But as a starting point, I definitely wanted to take a moment to talk about DIGG. What is DIGG? What are we doing with UMA in partnership with the KPI options, and how we believe that's going to help drive the behavior back to peg. And basically help incentivize the same process that Ample went through, right? We want to see that reverse a positive expansion from negative contraction, where you create a really large one-time revenue generating event and then move into a steady state where it can become a long-term hedge strategy for BTC. So I'm going to pause there and stop talking and give it to Wasabi.
Yeah,
Or
so
open for questions.
I was going to say, Clayton, when we were chatting earlier, you said you had a bunch from DIGG. I'm curious to hear your reaction to what Weezik just said. Has that resolved your questions? Do you have any other kind of outstanding questions from what you've heard?
Yeah, so Weezik, thank you so much for that overview. I really appreciated that. I think it did answer a lot of my questions. So as you were describing kind of the ample function and then the way that the KPI options are going to work over time, the way I'm picturing this is kind of like you're using the rebasing incentive mechanism, but basically you're using the KPI options to kind of like layer in another set of incentives that will like basically fix or patch up or improve. I'm not sure what word you'd want to use, but the incentive mechanisms that are built into the rebasing. So it sort of sounds like you're just modifying the incentive program a little bit to like help it behave more appropriately. Is that the right way of thinking of it?
Yeah, I'm a huge if you're creating a non-custodial synthetic rebasing token, like it's super important to me to stay true to the mechanics of it, because that's basically the value. There's no intrinsic value in it other than the fact that you believe and know it'll operate as such when it's above or below peg. To me, the options are almost like I kind of think of describing them in two ways. They're like a strategic airdrop, first off, because instead of just giving out DIGG to everybody, you're giving it to people that slowly are encouraging the behavior you want to see. So as 1 month, 2 months, 3, 4 months pass, more people hold DIGG that understand and want to hold DIGG. That's the first thing. And then secondly, it's kind of a strategic APY boost too, because APYs emit DIGG rewards regardless of the behavior above or below peg, whereas the options emit DIGG rewards when it's above, like when you see the behavior aligned with what you want to see. And so I don't know what the long-term play is here, and I don't think it's like this. Like I think there's a combination of many different things. Like I think we also still need to increase deeper liquidity by incentivizing, a move to maybe sushi and increasing an APY boost. But collectively, it does help. It does help, better align incentives to the behavior you want to see. So I think 100% agree with what you said.
And then people that basically come on sooner, like people that sort of start participating in DIGG now and then start receiving the options and start to have this recurring reward. I think you said it was a growing reward for holding over time. Like those are the people who are kind of like having to show faith sooner before it becomes like a very strong consensus mechanism. So they're the ones who will get rewarded the most. Is that the right way of thinking of it?
100%. Like the multiplier applied to holders is based on sellers. So the first go around, like when we launched this in May and it failed because the market tanked and we didn't have the incentives to increase new buyers and also run in perpetuity, there was just a lot of selling that took place. So the people that held during that longer period of 2 months received a 52% increase in their options. The multiplier was 1.52 applied. Now this time, I would expect the multiplier to go down. We've seen some selling, especially just in the last 24 hours, which people might be surprised to hear say this, but I expect to see that in the first month or so, because there will be people that are looking to take some risk off the table if they've been holding DIGG for the last 3 months. But as those sellers and those people leave that position, the multiplier encourages people to hold, and so what you would expect to see is that multiplier to go down as time progresses. So if you go in now, you'll see your options more likely increase, and then the next time they might be a 40% or 30%, and then 20, and then 15. But you would expect to see, if the program's working as intended, it for to go down. So the people that are in it sooner will get to see their positions compound more times and with a higher percent increase. And then obviously at the same time, people that continue to buy in will continue to increase their position through that as well.
Now let me ask you a very straightforward question. I hold some REN BTC, and or imagine I held some WBTC. This isn't really a comment on Ren or anything. Should I trade it for DIGG?
So this is where I want to be clear. I want to, like, I think everybody has to do their own due diligence, and obviously this comes with, everybody has to make sure they take DIGG is an asymmetrical bet. It is. And, but if you're asking me what I'm doing, yes, that's what I'm doing. My goal right now is to increase it's not so much thinking about the price so much. It's like, what percent of the market share do you own of DIGG? And my goal is to increase my percent of ownership of the overall DIGG market cap. Because when we go through that period, which I believe we will, whether it's a month, 2 months, or 4 months down the road, I want to see my position grow substantially and exponentially. When Ample went from its lowest point, it launched with 50 million tokens. At its lowest point, it was like 7 million. And then in 4 weeks, it jumped to, I think it was like 680 million tokens, and went through a 10,000+% increase in market cap, of 7 million market cap to 686 million. That's what I'm looking for in the near term. And so, but it's everybody has to make a decision based on what they know is acceptable for them. I focus on things that I think are very stable investments, and then I devote a large percent of my portfolio to what I believe are very asymmetrical bets. So since learning about DIGG 3-4 months ago, I've really felt that it was a great investment for me to offset my other side of my investment. So
I see. And so is the right way to think of this like the end goal here is to basically end up with an asset that tracks the value of Bitcoin and is non-custodial. But in the meantime, like as we're getting there, there's basically profit opportunities that exist outside of just exposure to Bitcoin. Is that the right way of thinking of it?
yeah, 100%. That is my belief, and I think that's why Badger is a BTC focused protocol. It creates an opportunity for both Badger, who owns a large part of the treasury, as well as individual investors to go through that one-time revenue generating event. For Badger, it could present a great opportunity to move a lot of DIGG to BTC when that happens, and launch things like stability vaults or other incentives, or just add to the treasury. For individual investors, like, again, everybody can make their own decision on what they think is the right time. Again, my advice is go look at Ample and make a decision that you think is healthy for you. But DIGG is forked entirely off the Ample code base, with the incentives, with the adjustments I discussed. And I have an entire article out there too, where I wrote, I think it's called like literally why I'm unbelievably long in DIGG or something, where I try to break out all the specifics on this topic. But yeah, I basically talk through the short-term, long-term benefits of what I see in it.
Awesome. Thank you for that. That's extremely illuminating. I see we have someone from the audience come on. I don't know if someone else, if anyone had any other comments to make too. But Jonto, I'm not sure who pulled you on stage, but maybe you had a question, or maybe you're a digger.
That was
Hey, yeah, no, I'm actually with the Badger team, so I was.
Cool. I
guess.
familiar.
Yeah. Hey. Well, yeah. The profile pictures have been changing at a rapid pace around the Badger Discord recently. So, yeah, I guess I'll give a little intro. So obviously, I am part of the Badger core team now, but started out as a community member before launch, and just kind of kept contributing, and then joined the team. But DIGG was always a planned part of Badger. It was actually the initial idea for Badger that Chris and the other seeders kind of had and were pushing, and then decided to kind of add on the farming yield generating component for Bitcoin. And then I came in and kind of ran the DIGG drop and some of the initial DIGG components, but then took on a larger role leading kind of product over at DIGG. And then, Wezik and the whole in Wasabi and the DIGG finance crew popped up and were doing a great job. It got to a point where there's more effort was needed and focus on DIGG. And I think as I haven't been here the whole time, but I'm been talk a lot with Wezik specifically, and the focus on it being community driven, I think, is what's most important. And I think it kind of needed to kind of have a step back from the core team and be more of a ground up community effort to even had to have a better chance at success. So really excited about the guys have been doing, and obviously we've been working on this UMA based rebase mining strategy for a while, and I kind of worked out the first mechanism of it, and then Wesic's really been kind of polishing it and taking it to hopefully something that'll be a long-term model that'll offer the support it needs. And we're fighting a lot of headwinds right now with the market, but seeing that turnout here and the turnout in the regular DIGG dojos, pretty optimistic about things.
So thanks for that. I wanted to remind everyone here that's listening, we have a text hub that's above the community hub in the list. So if you want to type out any questions or comments, please do that there. You can also raise your hand if you want to be on stage. Yeah, I'm not actually sure who wants to facilitate this next stage. Are we just going to continue with Q&A, or did we want to?
I don't know what everybody's thoughts are. I think Sabi, the cool thing over the last 2 months, and I think a lot of people I see here, and this is just a testament to it, like 72, 80 people here on the call. I think on the DIGG Dojo, which is just a Badger community, we had 50 people on it last week. The last 2 months have seen just this, if you're not on the Discord rebasing channel for DIGG on Badger, it's definitely a cool place to see. It's just a kind of rapid fire place. And there's just lots of movement. I think that's the exciting thing that most don't get a chance to witness. And I think community involvement, community inclusion is, for me, it's oftentimes a proxy in terms of directionally where the coin is going or where the product's going. And so there's probably a lot of things we could talk about. I mean, we could talk about the oracles and some of the things we've had to do over the last few weeks that have been to ensure the accuracy and just improve upon the rebasing mechanisms of it. What some of the things we're going to be doing in the future in terms of stability vault and other ways to kind of get to steady state and help use funds to help create kind of a buyer of last resort down the road, or how there's other strategies just even with other teams that we're thinking about. And right now, one of the top things that I'm focused on aside from options is how do we continue to increase liquidity as the rebasing has gone through and created a more shallow pool. It creates tremendous opportunity. I mean, I think the fewer there are out there, the bigger percent you can get from the market share based on buying. You definitely want to buy during negative contraction versus positive expansion if you're looking at it from that perspective. But also just how can we think of things like moving to Uni V3 and other stuff. So I think just wanted to throw all those ideas out. If there's questions, any specific questions on future roadmap or rebasing mechanics or options, Wasabi has gone into a lot of these other topics on the Oracle as well as Tritium. And so we're all happy here to kind of deep dive into any one area that anybody from this community would like to talk about or have a question on.
Good. Clayton, where did you say the question should be posted? I can't find it.
The text hub, it's directly above the community hub.
Cool. Thanks. So there's a few questions there. I guess I can just read them. The first one is basically, how does DIGG protect against typical dangers of non-custodial algorithmic peg coins, where it goes off peg causes a bank run? Status rebasing causes quarterly rather than price effects. I'm struggling to understand why this is not the same effect under a different name. Or quantity, sorry, rather than price effect.
All right, Trinity, I'm listening to you, and I'm trying to find the text hub right now so I can read it myself. Give me 1 second.
Yeah, it's just right above. It's in the UMA chat, right above the community hub, right on top, under events and above community hub.
Yeah, that's my question. I can explain it if it makes more sense to just ask.
Yeah, go ahead. That might be easier.
Yeah. So I guess with all the algorithmic peg coins, my biggest problem is if there's not an underlying asset or if it's partially collateralized, you can get into a bank run event when you depeg, right? There's a virtuous cycle when you're expanding, and there's a vicious cycle when you start contracting. And I get that it's elastic supply, so technically price can't depeg, or at least it'll rebase, but you're still getting a quantity effect that's also going to have the same effect of your net asset value of your holdings decreasing. So what is it about DIGG that kind of dampens that cycle so that you're somewhat more protected from those sort of bank run events?
John or Tritium, I don't either of you have any thoughts on this, I'm happy to give my response on this, but want
Yeah,
to
go for it.
also okay. So I'll first by start. Maybe this is not the right answer, but I don't think there is any to some degree. Like we've experienced really volatile negative contraction. It's probably not like as a non-custodial asset is trying to find that baseline, it does experience like ups and downs, tremendous ones, right? And like right now we're on the 3-month tailwind of a tremendous negative contraction. I mean, at the highest point, it launched at 4,000, it jumped to 7,800, I think, tokens. We're at like roughly 500 tokens. These cycles are what make it both an opportunity, but also like a risk, right? And like to me, what I look at in terms of my proxy for like what do I want to invest in terms of like DIGG versus another synthetic out there. Like I don't want to talk about others like in a negative, or positive or negative light just because I can't speak to them, know about them. But there's others out there, and I'll not say any names, but some of them you don't know what the circulating supply is, or you don't know what's going on, or you don't know what. Like I like DIGG because the Badger community is disgustingly transparent. I like DIGG because there's a constant push to like provide the best information and ensure that things work. Like even with the rebasing oracle, like there's been an enormous amount of work over the last 2 months. There was nothing inherently wrong with it, but as liquidity got lower on Chainlink, we realized, hey, we probably should think about time weighted versus volume weighted. It's these kind of things that help ensure, I think, those things don't occur. I think it's having liquidity positions in Sushi and Uniswap, and we might be trying to figure out how to create a deeper liquidity position, but it's also figuring out, is there a way we can use a concentrated liquidity position on Uniswap V3? So I don't know if I'm, again, Tritium John, so feel free to jump in. I don't know if I'm answering your question perfectly, but I don't want to make it seem like there's no risk either.
Let me add in there. I think, the coolest thing to me about DIGG is that it's really become a community-owned thing. So if you come over to the Badger Discord, there's a rebasing DIGG channel. There's a number of active community members from like Wales that are investing and trying to make it work, to like people that have all sorts of ideas, people that are really like interested in rebasing tokens in general. And I think like, we do need a better solutions to some of these problems. I think like to a certain extent, there's a lot of experiments and there's a lot of things that have happened in the world of rebasing, and there's a lot of cool ideas out there to try. And I think like right now we're working on these rebasing options, and we're trying to get that working and figure out what that means to try to just get some positive rebases going. But then after that, I think there is a lot of interest in making like changes to the product, or maybe like launching a new product and wrapping it over like a DIGG V2. So I think we're really interested in working with the community, and there's a lot of cool energy in defining like the future of DIGG and how to make these things work. Because I think in the long run, like what Badger wants is to have a somewhat successful like rebasing kind of Bitcoin based solution, right? And exactly how that works, we're pretty open to. And, DIGG was an experiment. And maybe what we realized through all of this is that we need to make some changes to it. But now we have a really strong community of really smart people that are all like giving feedback and coming together to decide what to do.
I'll add, I guess, from my angle, there's all that stuff is, I think, underlies the fact that money and these more algorithmically pegged coins, they're more like a regular money in that they're faith based. There's different stable coins or pegged coins, however you want to refer to them, available, whether it's backed by debt or seniorage or actual reserves that are economically pegged. You can do the math and say, okay, this will work, should work, etc. And obviously still need time for the mechanisms to function. Look at make or die, like that's one way. You look at USDC, that's another way. No one's solved, quote unquote, strict economic alignment for algorithmically pegged coins, and maybe that doesn't even really exist, but there could be monies that exist that are more faith based. And what do you need for that? It's time, and it's enough people and enough mind share. So, I think DIGG, what you're kind of getting to is like DIGG's more of a project and a community than really an asset right now. We're still working through it. We're still building out mechanisms, but there seems to be a good, strong groundswell of support on figuring out, okay, not just how can we make this thing meet its, initial intent for use in behavior, but also, let's figure out what the right place in the market is for this product and for this asset, and then work towards that. So everything's kind of on the table, and there's we're building out these mechanisms with this kind of baseline with these baseline goals. I would say people coming in and getting into it, yeah, to get in, enjoy the community, all the great discussion happening in there, and the ability to kind of build out and test out new mechanisms, and kind of learn along the way.
Thanks. I'll go over there and ask questions, but I appreciate those answers. That's helpful.
Yeah, I mean, and just to quickly add on to that, the way that I think about these rebasing mechanisms is analogous to a flap on an airplane wing. So like if you imagine how a wing flies, there needs to be kind of a certain amount of air flowing over the wing and under the wing for it to produce any lift, and then the flap is kind of just to make a slight adjustment upwards or downwards. So I see these mechanisms as, these making these slight tweaks upward or downward, but unless there's a sufficient amount of demand for the asset, which is like the air going over the wing, it's it's going to stall and it's not going to work. So like the two kind of avenues of development I see for DIGG are tweaks to the stabilization mechanism, but then the bigger one, in my opinion, is finding use cases for DIGG around DeFi. So other pools, combining it with other synthetic representations of Bitcoin, other farming opportunities, stuff on Polygon. So like that's the bigger, in my opinion, thing that needs to happen for DIGG to kind of find its natural niche in the market is these, sources of demand for it, which would make someone want to intrinsically hold it because it's DIGG rather than, the short-term mechanism related demand.
Okay, hang on. Let me just see if I think there are more questions. Hashir mentioned that the Oracle was a good topic. Maybe does somebody want to talk a little bit more about the changes that we've made to our Oracle and why over the last week or two? I could if nobody else wants to.
I just finished writing up something on that, so I'm happy to talk about it.
Go for it.
So when DIGG launched in January, it was using a Oracle that was designed by the Badger team that looked at the liquidity pool for SushiSwap and Uniswap v2. Well, first of all, what does the Oracle do? So every day at 4 p.m., there's a rebase, and it looks at is DIGG trading above or below the price of 1 Bitcoin. And if it's above the price 1.05 Bitcoin, the supply expands. And if it's below, it contracts, or below 0.95. So you need to know an accurate price of these assets and the ratio in order to determine the rebase. So you want to look at where the assets are trading across DeFi or centralized exchanges to select those, and then make sure that you have a mechanism that is kind of accurately reflecting what the market demand is and the trading dynamics that are going on. So version 1 was the in-house Badger Oracle that looked at Uni and Sushi, and after several months, the market cap of DIGG was much larger, and there were listings of DIGG on centralized exchanges. And the main question, or one of the big questions about the Oracle, is that it's better. The reason that places like Chainlink and UMA are offering independent oracles is so that us as Badger, we can say, hey, this is not our in-house code that's doing it. It's this trusted third party that's creating the oracle. So after a couple months, we moved to the Chainlink oracle for the trusted third party aspect, and also to try to incorporate some of this third party. Incorporate the centralized trading that was going on. So then the market did what it did, and DIGG saw a series of negative rebases, and it basically fell below the needed amount of daily trading, which is around $3 million daily volume USD, and they want that to be kind of spread out between centralized and decentralized exchanges. So what ended up happening was some, let's call it less than reliable trading data from some centralized exchanges was being overly considered, weighted in this Chainlink Oracle, and a few community members in our Discord kind of were looking at this because they're trying to, if you're a DIGG trader, you're kind of looking and trying to make sure that you know what rebase is coming and if it's going to be going a certain way, so you can push it this way or that way. And especially with these options, there's been a lot of that kind of activity. There was one rebase where it was an equilibrium when everyone was expecting a positive rebase. So people said, "Hey, what's going on? Let's look into this." And we saw that there was this undesirable centralized data that was getting in there. So for that reason, we decided to just turn off Chainlink and go back to our in-house Oracle that only looked at Uni and Sushi swap data. And so that's been in place for the last few days. And then one of the things we're looking at as a community next step is, okay, what do we do with the Oracle data now? Especially if we see a period of expansion, I think it makes sense to have centralized exchange data that is legitimate. If there's real trading activity that's going on, are there other pools that it makes sense to include in the Oracle? If we this new sushi product that launched today, if there's going to be multiple pools in there, or where we just need to make sure that we're kind of aligning that the Oracle is adapted to well reflect where the actual economic activity is going on. And I know some members of the community have been talking with UMA about their optimistic Oracle solution. So maybe we can get into that a bit here as well. Did I miss anything? Or Clayton, do you want to jump in and give us a briefing on the UMA Oracle solution?
Sure. So I know that that HashError anyway had reached out to ask us about this, and the optimistic Oracle works quite a bit differently than any of these kind of price feed oracles that come through centralized exchanges. Essentially, it runs pricelessly, which means that there isn't a live price being put forward, but instead it would only ever sort of come to question if there was a dispute. I don't happen to know exactly how it would be implemented in this particular instance. I'm actually going to invite HashError on stage because I don't know if you want to speak, Hash, but he's kind of the one who's actually even more in tight with it. He said he can't speak, but he said Sean and I have the DIGG optimistic Oracle live from MIP 61. So I understand that it's in progress. I know that we'd be very excited to have it in operation for DIGG. One thing I don't yet quite understand is would you guys only need to do a call? I think you would only need to do a call to the optimistic Oracle once every 24 hours. Is that the way that would work?
Yeah.
Ash,
So basically, no, I can answer that. So basically, we need the Oracle. Yeah, we hit it every day at 4 p.m. And then it probably doesn't hurt if we can look at it a little bit before 4 p.m. and make sure it's okay, right? We've got some dashboards and things that go off to check that it makes sense a little bit before that. But fundamentally, what happens once a day at 4 p.m. and that's it.
Yeah, perfect. Yeah, that's a really excellent use case for the optimistic Oracle. We would basically expect then that people would anticipate, what the rebasing is going to be, and then, so long as the response to your call for a request is accurate, then everything will go as planned. And then if it was not accurate and somebody detected that, they'd have a financial incentive to dispute it. And and basically they would earn some money for disputing it. And the wrong disputer would lose money, and that's the economic incentive that keeps that well trained, which pretty fascinating to think through. Yeah, go ahead.
So what I'm trying to figure, it's cool, but how does that process sounds like it takes some time, right? And what you kind of need is a relatively spot price of dig at 4 p.m. on a day. So like, I mean, I guess we could change it and say like we do it at 2 p.m. and then there's a 2-hour dispute window, right? But somehow like there needs to actually be a price at 4 p.m. in order to trigger the rebase, or we need to think about how that plays into the whole rebasing mechanic, which could be super interesting, but it does sound like it needs a little more thought.
Yeah, I was just watching the text channel because I'm actually not sure exactly how you're going to handle this, but I see that Cookies said that we'd request the price around 1 or 2 p.m. Report would be available around 3:30. Use it for rebase at 4 p.m.
Yeah, cool. That sounds really cool. And we have an active community, so it kind of like it breeds more community engagement. And yeah, I like it.
Yeah, that's cool.
going-
And I also look forward to kind of seeing like if somebody disputed a particular price that came through. Yeah, I'd be curious to see if that ever happens or how that goes down. But it sounds like the design works out. But anyway, sorry, I was speaking over somebody.
No, I was just gonna say, like, the cool thing about this is that Hashare getting involved, Wasabi writing an article. The goal of this is essentially kind of going back to, I think, Guard's question. It's all ensuring the accuracy of the rebasing mechanisms. And so, you know, again, it was the community that was like, hey, I think volume weighted is probably going to create some issues with low liquidity. My focus is like solely on trying to get liquidity and incentivizing it through APYs and other things or options. But at the same time, you have Wasabi, Hashare, and a whole other part of the community who's like, okay, well, in the meantime, let's figure out what let's do our due diligence here to, you know, they met with Chainlink, you know, we talked to Chainlink, and, you know, at the end of the day, the Chainlink Oracle looks at like 5 different sources, and some of those are centralized. And if you're looking at CoinMarketCap and it's pulling from liquidity positions that aren't even like real, right? Like it's like really thin DIGG USDC positions, which we don't even incentivize, you're going to have issues until liquidity gets back to where it was a few months ago. It was like, okay, let's figure out, we want to make sure it works correctly. So let's go back to the initial Oracle. And then, you know, people like Hashare was like, well, maybe we can use Zuma. And so just, I think what I'm trying to say here is I think the exciting thing is that there is just a really broad effort in the community that spans beyond just like financials or techno, like development or, you know, marketing. It's really like everyone's trying to ensure not only the accuracy of the system, the mechanics, but also incentivizing the financials of it and ensuring the development of it's all accurate too. So that's all I wanted to add to that.
I think that's pretty cool. I think it's especially fascinating that we're talking about creating this DIGG token based on using purely crypto economic incentives and market forces to control it, and then also using UMA's optimistic oracle, which is exactly the same thing, right? It's using economic incentives. And so like it's like it strikes me as a very pure effort when it comes to like decentralization and doing this the right way. And that's just pretty neat. I respect that. I also want to mention the POAP again, the POAP code. If you want to claim the POAP, you will send a message to the POAP bot in the server. And the code is DIGG KPI, all caps. So it's DIGG KPI, all capital letters. We're coming up on an hour here. Sorry for my background noise. Just want to ask anyone else that's on stage here if they have any final comments. And then anyone else that has any final questions to jam in the text hub.
You know, others have said this. I'll just, again, at least end with this on my part. Like, come talk to us. I'm open to chat. Feel free to DM me. I think everyone else on stage here would say the same. The rebasing channel on the Discord for Badger is like super robust. Talk to people here. None of us are steering away from hard questions. In fact, we encourage it. So like we want to talk about it, but we don't want it to be a pure feeling exercise. We want to create something that's really got the ability to stand and grow and scale. So that's going to happen through better ideas, more people, and a more inclusion. So really trust it, really respect the UMA community, and I think getting some different minds on the Discord channel is a strong next step in terms of the DIGG life and growth. And thanks everyone for their time today on UMA side.
Music and Wasabi and Will and Jonto and Tritrium. I Yeah, actually, I would love if you guys want to jam an invite to your Discord into the Text Hub so people can click through that. Is there a particular channel in Discord that you'd send them to? I'm guessing there must be a DIGG one, but I just couldn't see it at a glance.
Yeah, I'll
there-
drop. I'm gonna just find it and I'll drop an invite to that channel in the text hub in a minute.
Awesome. So yeah, anyone listening, I encourage you to go in and ask questions, understand how it works better, and yeah, look forward to kind of carrying on this relationship. My final comment would be that like I hadn't realized until this call just how intricate and ongoing the KPI option program was going to be using DIGG. You know, this particularly this mechanism whereby like people who didn't sell got more of the options the next time around. That's a pretty novel use of the KPI option design, and I think will be a good demonstration for other DAOs and other projects on how they can be used. So I just like as an UMA team member, like I appreciate you guys using this product in this new way, and kind of being willing to pave the way for other teams. So thank you for that. And yeah, thank you guys so much for coming on and doing this event. Look forward to doing something else maybe in your corner of the house next time.
For sure. Yeah, and thanks so much for hosting us today and for all the superhumans who came out today. Appreciate it.
All right, thanks everyone. Cheers. Good stuff. Let's keep the chat going. And the POAP code again is DIGG KPI, DIGG KPI. You can send that message to the POAP bot. All right, take care everyone. Thanks.